Good afternoon, Paul Georgi with closing comments for week ending September 4th. Well, the markets were impacted by the Fed's decision for QE3 and the stimulus package, and that caused a lot of excitement early in the session. And we also seen talk that that the EU may actually need to import some corn this year, so that was a supportive factor for corn and wheat as we started out the session. And then the weather was the big factor in the wheat, where Australia is still dry, causing some concern there. The drought that occurred in the European community has also been continued talked about, and the returns coming in on these sides of the wheat crop there continues to get smaller by analysts. So that has started the day and started the excitement. Well, as we progress through the session, the soybean traders started to take some profits. Spreading of buying corn, selling beans were a feature here today as well. But all in all, the wheat market stayed extremely strong. It took out some technical sideways chart support, and looks like we're going to close above that level, which is certainly supportive as we go into next week. When we talk about the corn market, however, we're looking at the 787 was the 50-day moving average. I talked about it this morning, and in the last few days, it's key that we close above the 787, 788 area in the December contract. We were unable to do that, and closing near the mid-session range to the lower half of the trading range today. Not a good sign for starting out the week. We're running out of catalysts to support this corn market. The yield is certainly a story and being spun and being worn out. So we need to get some new directives here and new thoughts in order to help this corn market move forward. The close below the 87 area in the DEES is going to be the first time we've closed below this uptrend in the 50-day moving average since mid-June. So a major concern this week. That's something we're going to be watching as we start the week and where we go. We're also hearing some returns coming in from producers in Minnesota, northern Iowa. I had a gentleman, customer of ours, call us from central Minnesota this afternoon. They harvested a corn plot there. Corn yields in their weigh wagon were anywhere from 232 on the low side and 256 on the upside. So there is some good corn, possibly isolated to that southern Minnesota area, however. So we're starting to get some of that news. That could weigh on the market just because the headlines are a bit negative. The traders are and the headline players are being impacted by that news. The other situation that we've got is the turmoil around the world. The loss of U.S. Secretary of State people or state people that are been killed in Egypt has certainly an impact on other commodities. And that turmoil is spreading around the world, causing traders to be a bit concerned, and also causing some support to energy prices. We've seen crude oil prices up sharply this week, going to be closing near the upper end of that trading range for the week. So a positive news there. And that also has been supported by the efforts from the Fed here in the U.S., the European Central Bank in Europe, and the decision by the German Constitutional Court. Those facts, I think, are something that has been exciting here today. But when reality hits, the reality is that China's economy is still slowing. You still have the reason for the Fed to make that decision and implement the QE3 is that the U.S. economy is not in as great a shape as we expect and they expect, and that force we're going to have to deal with here once this emotion is over with. The metals markets pretty quiet today in a narrow trading range, sold off of its highs, the early session highs, as the enthusiasm was supportive there, but by the close, closing near the lower end of the range. In the livestock trade, we've got a market there that we had good cash cattle sales today, stronger in most areas, up around the 127, 128 area in the cash markets in cattle. Futures ended up selling off here on some profit taking, some fund selling was a cause for the liquidation there, but the tight supplies of fed cattle certainly should be supportive as we move forward into next week and into the end of the month. In the pork complex, we've seen futures higher, but we've seen spreading also a factor there again, where we talked about earlier this week, where the people were lifting bear spreads. It looked like there was a lot of that being put back on today with the stronger cash corn prices. Pork producers and pork traders said, well, we're going to have tight supplies when it comes the middle of next year. They were buying those contracts and putting some pressure on the October contract, although the October contract did close higher on the day. So a constructive sign there. Hog slaughter continues to run very strong. This is about the 7th week of that occurring, and in our analysis, we're getting very close to that low in cash hog prices, we believe, and something to monitor here very, very closely. We expect that we could see some improvement as we go into the 1st of October, National Pork Month, and should see some encouraging data there. A lot of things happening this week. We got another big week ahead of us, and a reason to stay in contact with the Allendale Advisory. We wish everybody a very safe weekend, and I will talk to you on Monday morning. Thank you.